As GE goes. All right, GE, another viewer request. And yeah, that's an insane stage 4. Look, we're on the monthly candle chart, guys. And that's one of the pretty cool advantages of stage analysis is, check it out. Even if I have a monthly defined pattern using my classic chart trading framework, top to bottom, add it to breakout line, and then I get a target reach. But after that, I'm stuck a little bit. If I want to really ride out that wave, then I have to wait for another pattern to build up. And after that, add that to the breakout line. And what happens after that? Well, I need another pattern to be able to have another target. But the further you get away, right about here, that's just insane. Drag, drag, drag. After that, I trust less and less this pattern. Yeah, that's going in negative territory. So that does not quite make sense. The only alternative is penny stock land. If you have all that downwards pressure, if you have all these implied measure moves bringing you down off chart patterns. Eesh, man, look at that. Where are we at now? Wow. So that's when the stage analysis comes really handy. So instead of relying on swing rules, like Stan used to use some swing rules to kind of guesstimate exits, guesstimate slowing down of stages to say, okay, this is a clue that my implied measure move on my swing rule has been reached. I might have some slowing down, part of the weight of evidence, right? Trend line violations, closing above the moving average, etc. But if you don't have that, just following the stage, the trend, all those profits, the long-term profits, you'd be missing out on if you just do implied measure moves. So implied measure moves pretty good, but stage analysis, the technique is going to permit you to enter when the trend starts and really exit when it slows down. Stage 1, stage 3. And right now, GE, man, is hitting some 10-year, 9-year lows, previous lows around the 829, 830 level right here. Woo! What else I have? I have no other implied measure move. I have nothing except that we might hit some support right here. Wow, look at the mountain. GE has been in a downtrend for years, guys. Years. Is that what we call a bear market? Lower highs, lower highs, lower highs for years and years and years and years. So you there, you bought, and even buy and hold for this. Lower lows, lower lows. Where are we going? Lower lows, minus $8. So that is pretty. Wow, so much data. Yeah, GE is a dinosaur of the stock market, guys. A dinosaur. So that is clearly going back to low levels, testing this previous low. And if it busts through that, then we could be heading to penny stock land, guys. Very close. That is insane. All right. Downtrend on the monthly candle chart. Implied measure move reached. We've identified some support. We're going to zoom in on the weekly and see what we're dealing with, guys. Okay, let's remove all those trend lines. All right, whoa. Stage 3. Whoa. Break down below. I need some arrows. Even here, it started here. See the red zone, price action below 30-week average, 30-week average, declining and underperforming the SPX. But we're not out of the Ichimoku cloud, so we're not quite going to short it yet. We're going to let it marinate just a little bit more. And after that, now we had the breakdown. Pull back up close towards 30-week average. You could even have... This could be your breakdown line right here. Breaks down, hits some weekly defined support. Bounce back up to your breakout line. And after that, huge red candle right here. Right here. And off you right here. This one. So this would be a great opportunity. Good risk to reward ratio. The pullback was on low. Like that. Let's analyze a little bit. Increasing red volumes on these candles. The green candles here, the pullback was on contracting volume. Even if there's a gap up. After that, you had this candle right here, which red, high volume. And that's all she wrote, guys. Down. Pullback. Price action goes back down. Move your sell stops. The trader's way above the high here. Above the investor's way above the 30-week average. Down. Pullback. Goes back up. Right here. Going back down. Oh. Maybe here also. Pull back. Price action goes back down. Investor's way. And here you would have been maybe triggered out. But right now what we have is you have a nice... Oh! Here's my trend line. Stan's trend lines need 3 points. Break on the 4th. You're out. 1, 2, 3, 4. Right here, you could have exit half your position. Sell stop. Investor's way, you'd still be in. The trader's way, you would have probably taken half your position out, or you would have been completely out. Even the investor's way, probably take half a position out. Then you reassess. There was definite slowdown in that decline. What's going to happen? Your position's out. It's slowing down. And then all you do, you save all these weeks. 1, 2, 3, 4, 5, 6, 7, 2 months, 3 months. And worst case, well, you just reassess wherever whatever the chart gives you, whatever support's starting to get defined once again. If that stage 4 decline becomes a stage 1, after that goes back up, then you're good. You seize your profits. You weren't greedy. And after that, if it's just a stage 4 continuation breakdown, then you'll read in the chart. Where are we now? Not crescendo volume here. Right here, yeah, picking up. If you would have shorted here, you would have probably got triggered out here. Sometimes the timing is not super. It all depends. So if the price action goes down and you decide to short right here, your sell stop, you could always protect yourself by putting it above the 30-week moving average, above or horizontal breakout, the pattern. Maybe here. Then after that, your timing's just a little bit off. If you didn't choose the correct entry, 1, 2, 3, 4, 5, 6, 7, 8. Even this one, I don't think you would have got triggered out. And after that, shake out, and boom, down I go. Crazy red volume. So is that the end? The end of the fall? Keeps going down even more. Whoa! Severely underperforming the SPX after that pullback. So right here, this would have been a good risk to reward entry right here. Failed to go back up, even this candle right here, and after that keeps going down. Man, that stage 4 just won't stop, guys. So this is a nice stage 4 continuation breakdown, exit, seize your profits, sideways move, next signal, and when you think it can go down even more, it has more room to go down. There's no actual play for me now at this stage right here. Remember, because we looked at the higher time frame, we know that we have support coming up here at the around that 850 level. Is that it? Right here. What's that candle? Yeah, 830 level. So we might get a bounce off here and then go back into stage 3 territory. 830. Yeah, maybe a bounce here. Back to test that breakout line, breakdown line, and maybe continuation all the way to 0 right here. So until we're back above 30 moving average, until we have some price action above, until we're above the Ichimoku cloud, until we're above a horizontal breakout line, any of these levels here, definite not a buy. Hard to short right now unless you entered 1, 2, 3 weeks ago, because I could expect a pullback here. If it's a pullback on contracting volume, then you could probably short this to penny stock land. If it goes back into a stage 1, then you just have to wait and see how much time it needs to digest all that overhead action. It's going to need some time, a lot of time, because remember, all these people that bought, if it starts going up, eventually they're going to start selling to get even. If it doesn't go up, they'll lose patience. Okay, I'm out. I want to put my money elsewhere. And that's sellers. So it's going to need a few breakouts before going up. Embryonic breakouts. Go up, get sold into, another embryonic breakout until you're out of the cloud. Wow. Okay, G. So the lesson here is when you think low is low enough, it could get lower. Ciao, guys. Yeah. Thanks for watching.